Hey there, and welcome back to the Deep Dive.
Hello.
We've got quite a bit of material here today, and our mission, like always, is to sort of cut through it all, get you the key takeaways, maybe uncover some things you didn't expect.
Exactly. Think of us as helping you navigate all this information. It's always interesting to see what patterns emerge when you really look closely.
Today, we are definitely plunging into the world of U.S.-based spot Bitcoin ETFs. We're digging into the details from a recent article, specifically looking at the massive inflows they've seen recently and what that seems to be doing to Bitcoin's price.
Right. So our goal here is to unpack those main numbers, try to understand the connection between these ETF flows and Bitcoin hitting some new highs.
Okay.
And then also look at how market sentiment kind of shifted with all that. And we'll wrap up with what some analysts are saying based on this material we reviewed.
Yeah, I'm really looking forward to getting into the numbers on this one. The scale of the money involved is pretty compelling.
It really is. It helps show how, traditional finance is interacting more and more with crypto. Understanding these flows is, it's pretty crucial for making sense of the price action.
Okay, let's jump right in then, the big picture first. Looking at the data we reviewed, the headline number for these U.S. spot Bitcoin ETFs this past week was huge. We're talking $2.75 billion in total inflows.
That number really does stand out, and the context the article gives is important too.
How so?
Well, that $2.75 billion, it wasn't just a fluke. It actually marked a full week of daily inflows.
Oh, okay.
Yeah, which is the first time that's happened in about 4 weeks. And the sheer increase is dramatic. It's nearly 4.5 times bigger than the week before, which is around $608 million.
Oh.
Just imagine that kind of volume pouring into these funds.
Nearly, 4.5x the previous week? That's a serious ramp up. And the data seems to make a pretty strong case about the timing here, too, doesn't it?
Absolutely.
These big inflows happened right as Bitcoin was pushing past that previous all-time high from January.
Yes, the correlation highlighted in the analysis is, pretty direct. Like, take May 21st.
Okay.
On that one day, the ETFs saw $607.1 million flow in. And that was the exact same day Bitcoin went past its old high, crossing $109,000.
Right. And here's where it gets really interesting. Because the very next day, May 22nd, Bitcoin didn't just stay there. It hit a brand new all-time high.
Yeah.
The number we saw was $111,970.
Yeah.
So the timing of these big ETF flows lining up almost perfectly with the price hitting new records. It's a pattern that's hard to ignore in this data.
It really paints a clear picture. These funds seem to be acting as significant demand drivers.
Okay, so that's the big weekly number and its connection to the price highs. But let's drill down a bit. What about the daily stuff, especially towards the end of the week? That last trading day mentioned, May 23rd. How did the individual funds look?
Right. The breakdown for the 23rd is quite revealing, actually. The total net inflow for the day was $211.7 million, which sounds decent.
Yeah, still positive.
But when you look inside that number, BlackRock's IBIT fund was a massive outlier. It was, get this, the only fund posting net gains that day.
Really? Just one?
Just one, and it added a huge $430.8 million.
Wow. So hold on. If the net was only $211 million, but BlackRock added over $430 million,
yeah,
that means others saw outflows.
Exactly. BlackRock's strong day actually extended IBIT's own inflow streak to 8 days straight. But yeah, other funds saw money leaving. Grayscale's GBTC led the outflows with $89.2 million going out on the 23rd.
Okay.
And ARK21 shares ARKB was next, losing about $73.9 million.
Oh. So what's fascinating there is even on a day with, let's say, more modest net inflows overall, you still had this massive amount pouring into one specific fund, while other people were clearly pulling money out of different funds. It really shows that there's a complex sort of dance happening under the surface.
Precisely. It's definitely not just one monolithic way of moving everything together.
Right. Now, the data also mentioned that around the time the article came out, Bitcoin was trading a bit lower off that peak, somewhere between $108,141 and $108,490.
Correct.
What did the analysis say about market sentiment when the price cooled off like that?
Yeah, the data points to a noticeable dip in overall crypto market sentiment right around then. They used the Crypto Fear and Greed Index to measure it.
Okay, and what did that show?
It showed a greed score of 66, and the analysis highlighted this was down 12 points from the day before.
The day before B.
When it was showing extreme greed with a score of 78.
Okay, so what does this all mean then? Bit of a breather maybe? A cooling off after hitting those highs? And that's reflected both in the slight price dip And this shift from extreme greed down to just greed.
That seems to be the interpretation aligning with the data presented, yeah. You hit new records, often some profit-taking follows, and the market psychology shifts a bit. Still optimistic, maybe, but less frothy.
Less frothy, yeah. Good way to put it.
Yeah.
Now, looking ahead slightly, the data also gave us a broader monthly view, right?
Yes, it did. It noted that for May, up to that point, these spot Bitcoin ETFs had already pulled in roughly $5.39 billion in total inflows.
$5.39 billion just in May so far. And the article mentioned there were still, 5 trading days left in the month?
Correct. 5 days left when it was written.
So the analysis suggested they were potentially on track to maybe even beat their monthly inflow record.
That's right. The record mentioned was $6.49 billion set back in November 2024. So, yeah, definitely within reach.
That would be another pretty big milestone if it happened.
It absolutely would. And, this is where the analysis brings in an interesting counterpoint. Despite hitting these new highs, despite these huge inflows, several analysts quoted in the material are suggesting Bitcoin isn't actually showing the classic signs of overheating.
That does seem a bit counterintuitive, doesn't it? Billions flowing in, price hitting records. How could it not be overheating? What were the analysts pointing to?
Well, one specific example was CryptoQuant's analyst, Crypto Dan. On May 22nd, right around the peak, he apparently stated that indicators like the funding rate and short-term capital inflow were still low compared to previous peaks.
Okay.
And also that profit-taking by short-term investors seemed limited.
Right. Let's quickly unpack those terms for you listening. Funding rate, that's basically the cost traders pay to keep leverage bets open. It spikes when everyone's super bullish and paying a premium, often signaling a top.
Exactly.
And short-term capital inflow or profit-taking looks at whether money's just rushing in for quick flips or if recent buyers are immediately selling. High levels there can suggest instability.
Precisely. So the analyst is essentially saying, even with the price surge, these particular metrics, which often flash red near market tops, weren't flashing red this time.
So low funding rates might mean leverage isn't crazy high, and limited profit-taking could suggest buyers aren't just flipping, maybe indicating a slightly healthier market structure, less prone to a sudden crash.
That seems to be the implication, yes. Less risk of a cascade fueled by over-leveraged positions, perhaps.
Okay. So this brings up a really important question for you listening, I think. How do we reconcile this rapid price increase, these record ETF inflows we've detailed, with this idea presented by analysts looking at other metrics that the market isn't fundamentally overheated yet? It kind of suggests maybe this rally, maybe because it's so driven by these new ETF flows, has a different feel, a different underlying character than past cycles.
It certainly points towards a potentially different market dynamic, where the source of the demand, these big, possibly less leveraged traditional finance flows through ETFs, might be impacting those typical overheating indicators in a new way.
Okay, so let's try and wrap up this deep dive into the Bitcoin ETF data and the price action. The key things we pulled from this material for you are, first, those record-breaking weekly ETF inflows, nearly $2.75 billion, which lined up really closely with Bitcoin hitting new all-time highs over $111,000. Then we saw that detailed breakdown, showing lots of action within the funds like BlackRock's IBIT having that amazing streak, even while others saw outflows.
Right. And we also noted that slight price dip recently happening alongside market sentiment, cooling off from extreme greed down to just greed.
And crucially, the analysis highlighted those analyst views, suggesting that despite the big moves, key indicators they watch aren't necessarily screaming overheated market just yet.
Exactly. The sheer amount of capital coming in through these new ETF channels is clearly a major factor influencing the price, even if some of the usual speculative froth indicators maybe aren't as high as in the past.
So considering this massive flow of capital into ETFs that the data detailed, the new price highs we saw, and that analyst perspective suggesting the market isn't fundamentally overheated yet based on their metrics, what might happen next if these trends continue, based purely on the patterns in this data? What will you be watching for going forward based on this information?
Definitely a lot to think about there.
Absolutely. That's all for this deep dive. We hope you found that useful.